Alright, welcome to my channel, ICT Backtest channel. This channel is meant for educational purposes. I am not a financial advisor. This is myself putting the ICT concepts into play. I'm here to educate myself and enjoy the process. So let's get into it. So I will start off with the mini S&P 500. So we'll start with the March contract, ESH 2024. Which is what we're looking at right now. Start off with the weekly bias. So on the weekly bias, we already hit the buy side liquidity about 2 weeks ago, the week of 18 December. So really there's no bias on that side. Drop down to the daily. This is the same buy side liquidity on a weekly basis, just showing it again. Because we've already taken the buy side, we're not really looking at anything else. We will notice that this buy side on a daily basis has been taken out, but nothing else outside of that. So we'll drop down into the 1 hour chart. So on the 1 hour, I have a number of things here. So we'll start off with Wednesday 27th of December. It's kind of what I was watching, not really doing much, just trying to put everything into practice. But I did notice that on the on the hourly chart, this is buy side sitting right here, and buy side liquidity was not taken out. It was not knocked out with this swing high right here. Go back. So it was not taken out. Instead, 2022 mentorship model kind of comes into play. So buy side liquidity here, we create a low, we consolidate a little bit, we create that swing high, but it really wasn't, didn't take out buy side liquidity, sorry. But then there's a market structure shift to the downside. This was Friday, so Friday 4 in the morning started going lower. There is a fair value gap in between, kind of something real small, nothing crazy. Again, it happened at 0.7. There's another fair value gap if you're riskier, but the leg or the candle that kind of took out the market structure shift starts with this one. Obviously you see a lot of displacement to the downside. So what I did is I put the then I put the I don't even know the name of the fib retracement, sorry, to the downside with the displacement leg after the market structure shift. So 50% equilibrium is around this area, but the area of interest was the 62 level. So 62 level would be ICT's optimal trade entry. So around Monday night, kind of consolidating in between that, which Monday was New Year's Eve, so there's no trading. Tuesday, kind of was watching around this area what it was gonna do. It did reach a high of the fair value gap, but it did not. The bodies of the candle stayed within the fair value gap. Let me take this out. So it did stay within the fair value gap. If there was a trade to be made, stop would have been at the high of this candle, which it was nowhere close to it. So going back to the fib retracement, put that 50%, take off of 62. So we are in premium up here. I'm sorry. Correct me if I'm wrong, but we are in discount up here, going to premium. I may have said that wrong. Just let me know in the comments. So we didn't go past the fair value gap. The bodies of the candle stayed within the fair value gap. So I immediately had a bearish bias starting Tuesday. Of course, this happened overnight. I did include the new week opening gap just to kind of see how it comes into play. Not really too much focus there. So starting Tuesday, which is today, the 2nd, I already had a bearish outlook for it. Nothing on the daily or weekly for me to be high probability, but started the day off with a bearish mentality. We'll drop down to the 15-minute time frame. So on the 15-minute, we had a sudden drop, 6:30, going up to 7:45, and then when we see the 8:30, we are going up a little bit, retracing a little bit because I had a bearish bias. You know, I really wasn't looking for any upside trades or anything like that. So let me drop lower to the 5-minute. Yeah, so I didn't take any trades based on the 5 minutes. I actually took it based off of the 1 minute, but we'll go down by 5, 4, 3, 2, and 1. So we'll do 4 minute. So 8:30, kind of notice there's a sell side liquidity here. Before the market opened, it actually took the sell side liquidity. The 9:30 opened, sorry. We see a nice candle up to the upside. I did label this area, kind of see like if buy side would be taken out. And the reason behind that is because I was thinking if I had another fib, would it go to equilibrium or would it go into the 62 level, which would probably put a fair value gap around this area, to see if it goes on the downside, just as similar as it was to the 1 hour, you know, displacement to the downside, 62 level retracement, and then back down for that trade, but it did not happen. Like I said, 4, we'll do 3, 2, and then we'll just jump into the 1 actually. We'll do what I saw in the morning. I did take a demo trade, still learning, so bear with me. So 8:30 candle right here, 9:30 opening. Because it was going to the upside and I didn't have the high probability or confidence, I kind of waited to see the Silver Bullet AM session, which is between 10 in the morning till 11 in the morning. So within that time frame, on the 1 minute chart, saw this aggressive move down lower. It took the sell side at 9:05:04, and it took the 8:30 sell side as well, which 9:04 already took it. So it did take all those levels out. So I was expecting a retracement higher. So 50% level, kind of expecting the, let me see, let me take the background off, 62 level, trying, seeing if there was an optimal trade entry. Obviously we went a little bit more higher than the fair value gap, but because I do have a bearish sentiment, I labeled it as an inversion fair value gap according to ICT. So taking off this fib, and we dive deeper into the fair value gap right here. So we had the 1 minute fair value gap formed by this candle's low, this candle's high, and then the imbalance within this candle. Notice price did go up to it, but I didn't just enter. I kind of wanted to see if it was going to have some sort of bearish movement, some bearish market structure. And I did notice that we did have the bearish structure right here. We had created a little bit of a sell side, and then we had a displacement lower. Then displacement had a fair value gap. Believe I got into 87 or 47, 82.50 as well. It did go against me a little bit, but my stop was at this swing high, expecting not to be broken due to the fact that there's a swing high, swing low, and then this swing high never took out that buy side. So I already had a bearish bias from the week, from the hourly. There is a displacement lower, a swing high that did not take out the previous swing high, and now I have some form of displacement or fair value gap within the fair value gap that I already had expected. So just to show the trades now, doing this wrong, I gotta do, there you go, paper trade. Okay, so here are my trades. So these are learning trades just to see what happens. I did have slow internet at the time, and I was trying to remove trades, but in reality I ended up buying even more trades, which kind of went against me a little bit, but not really. So 47.8250 entry right here. I did weather about a little bit less than 3 handles, but my stop was placed all the way high up there, as I mentioned. And then the target I was aiming for was these lows down here. A little bit of low-hanging fruit. I should have done 5 handles, but because it was fake money, I went ahead and just aimed for that with the bearish outlook. So kind of weathered it a little bit, saw volume imbalance, never revisited, left it open. At this time, this is where I thought I was buying to get 1 L, but I ended up selling 2 more and then bought 2 more down here. And then eventually my order came out complete at 4774.25. Let's see if I can show it quick. Paper trade. Okay, so 1029, which was this candle. No, doesn't make sense. No, that's when I closed it. So I sold these at 1017. You know, I did all that whole mistake I had in between there, all this stuff in between, eventually getting out at 1037 for my final and all. It was a $540 profit from up here, this area, down there. This is the whole mix-up that I had, and closing orders really quick for no reason. But either way, so about $700 demo money, which is great. And then let's move on to the PM session. Quick little review. I didn't do anything on the PM session. As you can tell, there's no trades there, but I'm looking at it in hindsight and trying to learn. So here's the lunchtime. I'm not really trading during lunchtime, but as ICT says, lunchtime seeks liquidity. So there's a little bit of buy side on this side, and also buy side from previously in the morning. They were all taken out. Sorry, excuse me. They were all taken out, and around 1300, which is 1 p.m., starts looking for sell side. It creates another low, 110, and then I start to notice clean highs at 1327 and 1347, which would have been a nice setup for in the future, but so it created buy side there. So now silver bullet times 1400, so we put a line right there. So directly in this candle, which is in the fair value gap, there's displacement lower. It took out the sell side, so displacement lower, retracement into the fair value gap. That could have been a trade exactly at 1400, so it would have been a nice little trade. Maybe aim for 5 handles, and or you could have aimed for the AM session low, which is down here at 1038, the low being at 4773.25. It reached it right there, 4773.25. Could have done that trade. And there was another setup, I think on the 3-minute time frame, if I'm not mistaken. That is correct, 3-minute time frame. displacement higher. So the interesting part about this one is that actually this is an order block as well. Just gonna note that real quick. So displacement higher. There's a little bit of a retracement. It never really went lower than the fair value gap, and not only that, but the displacement higher kind of created a little bit of a buy side, and then you start to notice that there's another willingness to go higher, and it actually produces another market shift before retracing back into the original fair value gap. It does touch the order block right here, opening price. Once it does that, it kind of uses the fair value gap low perfectly, so it kind of covers the entire fair value gap, and then it just goes up higher, which of course, as I had previously mentioned, go back on the 1 minute, it took out the buy side that was originally created between 127 and 147. The clean highs eventually was aimed for that, and the candle, actually after hours at 1800. Because it's a bearish outlook, we're not really looking to kind of get a trade like this going, but this just goes to show algorithmically there's a clean highs, there's a fair value gap that was created underneath all this price on a 3 minute. Use the fair value gap, and use the order block it before feeding, or I'm sorry, making price go higher. And even then, you could have taken this buy side right here, which would have been a nice, what is this, 47.81 and a half, and 47.69 and a quarter. So plenty of space to take the 5 handles. Obviously I didn't take it, I'm not looking to take it, looking for high probability. And yeah, let me know in the comments how I did, how I can improve. And yeah, thank you for being here.